You're watching Investor's Guide on ET. Now, this is our budget special show. This is where we figure out how the Finance Minister's announcements affect your money, your spending, saving and your investments. In the studio with me, Shailesh Haribhakti, Pankaj Razdan, Anuj Puri and Dhirendra Kumar joining us from Delhi. We have a lot of questions as well from our audience in the studio. We have a question from a young lady over there. Go ahead.
Hi, I'm Ananya, a 23-year-old avid investor. I want to know that our budget has given us exemptions on the equity investments. But how do we target that and take advantage of it?
All right, a very young equity investor. That should make us all extremely happy. 23-year-old Ananya. Pankaj, we know that it allows young, new investors to come in and start investing. Like Dhirendra pointed out earlier, there's a worrying part of that. How do these investors access information? How do they access research? How do they decide what they want to invest in? Can you give them some tips?
First, I should congratulate her because I'm really very happy. After a very long time in my life, I'm coming across people at such a young age who really wants to get into equity. So congratulations. I think Dhirendra pointed out in the beginning itself that equity is a fantastic asset class to be in, provided you really understand it well. It's an important part of an asset allocation. So when you buy equity, please understand what's an asset allocation depending on your horizon and your risk capacity. And when you have to invest in equity, if you don't understand, as you're talking about, then somebody needs to get an access. It doesn't happen overnight. It takes years of experience to really understand the fundamentals of how to go and evaluate an equity. So I would suggest enough number of financial advisors available, very qualified. My friend is here, chartered financial planners are there. You can go back to them, take an advice and go and choose a nice fund which will suit your requirement, a mutual fund. They also access the market on your behalf. And for every start investor who's starting newly in the market, I would really advise you start through a mutual fund. It's always a temptation to go and look at one stock, you buy 10 becoming 50. Many other things you really miss out. There are a lot of stocks when you buy at 50 becoming -5. So you actually lose a capital. So never get flared by it or never get attracted by some of these noises. You go back to a fund which actually allow you to go and grow disproportionately better than any other asset class over a longer period of time. So that would be advice. And since you love to go and find out, understand equity, over a period of time, there are enough number of information is available. First, once you start understanding mutual fund, my other colleague, my friend, Mr. Dhirendra Kumar, start understanding his value research reports. Once you understand, then go back to a next level of understanding individual stocks, if you're interested in being a direct stock investor.
Right, so this is interesting. From what we understand of the Rajiv Gandhi investment scheme, if we do the math on it, it basically says that if you invest 50,000 rupees, provided your annual salary is less than 10 lakhs a year, you can claim half of that amount as a deduction against your salaried income, which means that finally, at the end of the day, the savings you'll make on tax is 5,000 rupees a year. So you might want to start with a mutual fund. Dhirendra, while we're talking about mutual funds, I know that you don't really advocate the idea of investing in sectoral or thematic mutual funds. You say go equity diversified. But for someone as young as Ananya, she's 23, she wants to start investing in equity. Can you recommend a fund that she can start off with?
No, plenty of funds, and I would say that if she is starting for the first time, I always suggest that get started with a balanced fund. You will get 65-70% into equity, and it will be a great, it will give you a steady growth with great stability. If you are a risk taker, then by all means, choose a diversified equity fund. I would say a large and mid-cap fund. Pankaj Birla Sun Life Frontline Equity could be a neat choice. So will be HDFC Equity or DSP BlackRock, equity fund. They are UTI equity fund. They will be they are generic, a fairly well diversified general equity fund. That is a good starting point. But the earlier question, of course, that was in the earlier segment, what you said that this whole pravachan on infrastructure. A lot of people will get carried away by this, and for 4 years, investors have been going through the pain of investing into infrastructure. Investors get carried away. The dynamics of equity market is very different. The dynamics of infrastructure companies is very different, and they have recently got enhanced their equity. They are over leveraged, and they are finding extremely difficult to make profits. And all the talk that we hear about from the government, it does not translate into speedy actions and decisions which should translate into flow of work for them. So don't get carried by this. And infrastructure fund, I think it is proving to be a test of patience for most investors. So I would suggest keep away from that. I think if you entrust your money to a good fund manager, he will position himself opportunistically as and when the time is good. time is opportune for these stocks to be loaded into those portfolios. Don't curtail the, when you invest in a thematic fund or a sector fund, you are basically giving him a limited mandate that this is what I have chosen, you are not supposed to do anything else. And that ends up, constraining him to perform.
But we're going to try and figure out how those announcements affect your money. We have an audience in the studio who have questions to ask us. The gentleman in the back, you have a question? Go ahead.
Yeah, I'm Vikal Gupta. And my question is, which sector going to give the best return in next 12 months, considering the effect of the budget? And if you can specify some of the companies, that will be great.
All right, so I want to understand from you first, Vikal, why just 12 months? Because retail investors have the time to stay invested for longer to 12 months.
The reason for the 12 months is, every time the budget will give some, new highlights, and then you can keep changing the, directions.
It's changing as per the budget. Pankaj, I want to ask you first, before we go to his answer, how much will the budget change the market? We know the market was looking at the budget. It seesawed a little bit today, that ended 200 points down. How much does the market, in the long term, react to an event like the budget? Can I base my decisions
fundamentally,
on
a budget should never impact a market. It's an accounting exercise. It talks about two sides of a balance sheet. And I think I made an opening statement when I started that India has a great structural story, long term. But unfortunately, we make it cyclical because of these yearly budgets. So we start expecting from a budget that all the changes for the next year is going to happen. Is going to be my Aladdin for this year. It's going to come and somebody is going to come and dole out a lot of good things for me, which is a very wrong way of doing. And unfortunately, that's why India has a very cyclical story now. To me, I think one should never look at what are the sectors which are going to do good or bad. In stock market, I've learned it. Where you make money is on the misprice of assets. I may have the best of the sector looking from here, but if the stocks are already priced high, you're never going to make money out of it. So you may have a great story coming on infrastructure, but if the stocks are at 20p, and as Dhirendra pointed out, you're a highly leveraged company, where are you going to make money? So a trader may make money, but not an investor, because trader will move on the sentiments and many other technical factors. So fundamentally, just take it out from a mind that budget will ever allow you to go and make money on a sector. I don't talk on stocks, but I can tell you fundamentally, if you want to make money, is only on the misprice of assets. And those misprice of assets actually help you on a fundamental basis for a longer period of time. And one has to move away this magic wand of 12 months, because sometimes you can make all the return in 6 months. Sometimes you'll have to hold it for a year and a half, because there are many other factors which drive the price of a stock. So just be out of the mind that budget is going to help you in any sector. And if it does help sometime, it is only to traders who just time it, who just understand it, not for an investor. Because by the time you want to understand this sector is going up, all stock in the sectors are going up, the stock would have really come down. As I said,
so tell us, if he were to take Dhirendra's advice and use an equity diversified fund, maybe pick one of the 3 funds that Dhirendra suggested earlier in the show, how long should he stay invested in order to benefit from that investment? Obviously not 12 months, but how long would you recommend?
But I'm saying last 4 or 5 years have been extraordinary in the Indian equity markets, because we have seen 2 or 3 cycles which none of us in our earlier career have seen it. We never imagined what will happen in 2007, and we could never imagine what will happen in 2008. Things became better in 2009. Again, 10-11, we saw again a European crisis. So if you really remove this 3-4 years of cycle, but every 4-5 years, if you go back, you see equity as an asset class has given far better return than any other comparable asset class, with the advantage of having liquidity at your disposal. So for me, if you remove these 2 or 3 cycles which have happened, and I hope in future in life that such cycle doesn't repeat in so many frequent intervals in such short period of time, but 3 to 5 years is a very ideal way of looking for equity investments.
Right.
You may make money for a year, but just take it a little longer.
3 to 5 years for your equity investments. Pick an equity diversified fund. Anuj, I'm going to come to you very quickly. We heard all of that talk about infrastructure. We heard talk about highways. You did talk about the fact that it will open up land parcels and it will bring in more real estate. What are the cities that you think are going to grow that we can consider as real estate investments over the next 10 years or so?
I think it's going to be tier 2, tier 3 towns, and several reasons. So one is that ECB has been allowed on the affordable housing, and clearly affordable housing is going to be in tier 2, tier 3 towns, and that's where you're going to see maybe some of the more organized developers entering those towns. The second is this highways is going to open up a lot more land parcels in those cities.
Can you name a few for us, for people who are considering investing in
So really where there is an economic driver as well. So I would say is Chandigarh, Cochin, Coimbatore, Jaipur, Bhubaneswar. These are the cities which have already an economic driver. Infrastructure is now linking those cities, and clearly in those cities, given the ECB that is now going to be available for affordable housing, you're going to see some of the larger developers moving into those cities. So clearly from an investment point of view, I think it makes a lot of sense to get in there.
All right, a list of cities that we can consider if you're considering buying a second home as an investment. We have room for one more question. You have a question on gold? Go ahead.
Hi, I'm Divya, 24 years old. In the budget, it was said that the basic custom duty on gold has been doubled. So, if and how it will affect gold loan borrowers?
Gold loan borrowers?
There's no...
There's no effect on gold loan borrowers?
Gold loan borrowers. It has an effect on those who want to buy more stock of gold. The logic of the government is that we already have over $2 trillion of gold in India. And it's already over the top. If you were to read some of the most well-recognized papers on asset allocation, you will find that gold is not an asset class which responds to changes. It's just that as uncertainty increases, there are more people who want to just get into that asset class.
Would you recommend that investors have gold in their portfolios as an asset class? What would you say you should cap it at?
I would say extremely small quantity.
5%, maybe 10?
Between 5 and 10%. I wouldn't go beyond that. And it's better to do a gold ETF. In fact, the idea ought to be to really monetize this asset wherever it is lying and make sure that it becomes active. That is the big opportunity out of India, where you have this huge $2 trillion plus gold stock. The idea has to be how do you monetize it and make use of the value which is embedded in it for creating better investments.
One of the routes for that would be a gold loan where you actually exchange that gold for cash that you will spend. Dhirendra, we're talking about gold ETFs. You keep talking about how we shouldn't take a very strong bet on gold, but for the young lady who asked the question right now, how do you think the new, the increase of duty on gold will affect our gold ETF investments? Will it at all for someone who's maybe doing an SIP in ETF? Is that the best way to go about it?
Yes, if you're thinking of, gold as an investment, then it's a better way because, and I think that will escape this custom duty because the way gold ETFs are structured, they will not be affected. But certainly, gold prices goes up, the cost of gold will go up if you plan to buy it. And from that standpoint, and borrowing against gold, I think, that borrowing has been democratized now by, initiative from a lot of finance company specializing in this. And I think it's a great idea because, this is a useless asset which has substantially embedded, value in it. And people are able to liquefy it with these borrowings. And it's a very liquid, it's a trade, and in the form in which it is kept. Otherwise, it was difficult to liquefy it without these entities coming into being. Now, a lot of banks have taken initiative. So, gold prices going up, basically you can now borrow more because the embedded value is higher.
Right.